Uber stock has gone up 36% since the start of this year. And now at one point, it was up over 70% since the start of the year. So in this video, I want to go through Uber stock analysis. I want to see the fundamentals. I'm going to look at the business model, the moat. I'm going to go through their recent financials, their financial history, and the most recent earnings report. As always, I'm going to go through a DCF valuation of the stock and the shares in the company. So this involves a discounted cash flow of up to 10 years. And we're going to discount the cash flows for those 10 years back to the present value and get the fair value of the company. So if you like this content, please like and subscribe. I've opened up a free Patreon and free Discord, and you are free to join those at any time. They're linked in my bio in the YouTube and on X. And you get a great alpha with that. You can see stock market analysis. You can see my real-time buys and sells in my public portfolio. If you want access to the private investment group, you're going to have to go through the Patreon and become a member there. And for the first 100 people, it's going to be only $2 a month. But with that, let's get into this video about Uber. Uber is not a startup anymore. It's not cash burning. It's a highly profitable company at this point in time. And through their Uber rides and their Uber Eats, they make billions and billions of dollars in free cash flow every quarter and every year. Now, this is important because they can use that free cash flow to buy back stock and increase investor returns. And I'm sure everybody knows their services. They do Uber rides, which is getting from point A to point B in a vehicle that is called through your app, your Uber app on your phone. And then you can also do Uber Eats, which is food delivery to your home or your office, wherever. And I don't know about you guys, but I use this constantly. I'm actually waiting for an Uber Eats order right now as I record this video. Now, other competitors are trying to emulate that, but I think that the network effects for these two services are pretty entrenched for Uber. Now, investors thought that Uber would be killed, their business model would be killed because of the rise of AVs, the autonomous vehicle segment and services. But actually what's happened is their strategy is winning. Because Uber doesn't own the cars, they're basically having contractors do their services for them. They're really prioritizing partnerships over ownership. So instead of spending billions and billions and billions of dollars building their own robo-taxis, Uber is partnering with the leaders in the AV space. We're talking about Waymo, we're talking about AV Ride, we're talking about GM's Cruise, BYD. And so this partnership model over ownership model is really helping Uber because it gives them ultimate flexibility and it prevents them from having to spend billions and billions and billions of dollars to develop their own robotaxi fleet, which would take time, tons of money. And on the technical prowess of Waymo and Tesla, it may not be even up to par with those competitors. So why compete when you can just partner with them? And that's Uber's model as of this moment. But even going beyond that, partnering with these AV leaders will also help them create a hybrid network. So pure autonomous vehicles can't go everywhere. They will have a limited range. These limitations really work in Uber's favor because when a trip cannot be accomplished, they can always switch to an actual person driving the vehicle and getting that person where they need to go. So that's called a hybrid network model. And Uber would be perfectly positioned to take advantage of this. So yes, you can select robo-taxi if you want one. But if one isn't available or can't handle that specific route, a human driver would be dispatched instantly to make up for that shortcoming. And so that would make it almost 100% reliable because you could either get a robot or you could get a human. And finally, their network effects from being one of the first companies to do this allows them to also cross-sell between their two services. So if you're taking an Uber ride, you can also sell them Uber Eats at the same time using ads or whatever, getting a discount or coupon. If you take an Uber ride, you can get a discount on your Uber Eats or vice versa. So this allows them to keep a nice ecosystem, the user within that ecosystem. You get rides, you get eats, you get freight. It creates a flywheel that's hard to break. So it gives you lower acquisition costs. They can acquire a customer for a ride and then cross-sell them food delivery for free. You get Uber One. Uber One is a membership service and it locks the people in because it increases retention and spend per user because it gives them discounts every time they use the service. I've been an Uber One member for a long time And I forgot that I was even an Uber One member. This is just charges $10 a month for me every month, and I just go along with it because I use Uber Eats so often. So it's actually saving me money because I'm an Uber One member and I use Uber Eats so often that it just works out that way. So this is the flywheel that Uber has created, and it's really working in their favor. So there are some bear arguments to be made against Uber that could be taken seriously or not, depending on your thought process. One of them is about valuation. Like I said previously, Uber has come up to 37% since the start of this year. So there's fair value estimates from analysts ranging anywhere from $75 to $110. So you could look at it overvalued, undervalued, depending on where your analyst estimate lies. In that same vein, if the growth slows from its current 20+% pace to the low teens, the current multiple may contract, and that limits the stock price appreciation in the future. Another argument that could be made is the winner-take-all robotaxi threat, and this is the major argument, where these big AV companies might not need Uber if they just have their own fleets. Waymo, Tesla, if they have their own fleets, what's the point of partnering with Uber when they could just do it themselves? So disintermediation, the long-term fear is that if a company like Tesla or Waymo achieves full autonomy and they don't have to use that hybrid model that Uber is proposing and builds its own massive fleet, they might not need Uber's demand network. They can just provide that service themselves, and then they have their own fleet, they can just launch and boom, and then Uber's done. If they launch their own apps that are 50% cheaper than Uber, they can destroy Uber's pricing power. If transport becomes a cheap commodity because of all these AV fleets in the market, Uber's take rate, the percent of the fare that they keep, could be squeezed. So these are some of the bigger arguments about the robo-taxi threat. And then finally, there's regulatory headwinds, and there's labor costs. There's a huge fight a few years ago about whether the drivers that drive for Uber are independent contractors or employees. If they're considered employees of Uber, then Uber would incur a lot more cost to deploy these employees versus contractors. A lot of states like California or Massachusetts are very likely to say, Uber's drivers are employees versus contractors just because of the way the policies are dictated in those states. So those could suddenly spike Uber's costs and bring down their earnings. So let's move on to their platform and business highlights. I'm looking at their investor presentation. They also have financial and operational highlights, segment details, and consolidated financials. So we can go through this and check all the checkboxes on this analysis. So their areas of strategic focus are trip to lifetime experiences. So like we talked before, if a person takes a trip, they want to capture them in the Uber ecosystem. So then they're going to be sold, Uber Eats, they'll be sold other experiences and other discounts, other coupons, things to keep them paying customers of Uber services. Then number 2 is building a hybrid future. And I talked about this earlier as well. Hybrid future meaning becoming an aggregator of the AV market and model. They partner with these AV suppliers, and then they have autonomous vehicles plus real people driving these cars. 3, beyond food to local commerce. So they're looking beyond just delivering food to delivering local commerce, expanding beyond food, and getting into more segments that way. Number 4, multiple gigs. So maybe having these contractors do multiple things and grow the services that an individual independent contractor or employee can do with Uber. Growth engine for merchants, that's number 5. And then generative AI, and there's a ChatGPT symbol here as number 6. So we'll get into these and go through all of these strategic focuses. So their partnership with NVIDIA is a pivotal step to scaling global autonomy. So here they have a partnership with NVIDIA to create autonomous vehicle technology ecosystem. So they're creating a joint AV data factory, more Uber-ready AVs to market. So they are encouraging this AV technology and embracing the AV market so they can use that in their own business and create that hybrid model that we talked about. Grocery and retail significantly expands our delivery opportunity. So this is what the second point is they are going to get into other retail like pets, electronics, home, beauty, and groceries. So that really expands just, I'm getting takeout from a pizza place or a burger from a burger joint. It's much more than that. And so they can deliver all sorts of goods to people at their homes or offices. And they're saying that the total delivery addressable market, the TAM for this opportunity right here, is around $12 trillion. And the grocery and retail addressable market is 10 trillion of that 12. The food addressable market is, so they are expanding into this 10 trillion TAM right now. And they're saying that opportunity is expansive. In this, they're innovating on the GNR, the grocery and retail product, to drive discovery and conversion. So they're using AI to help provide customers similar items, other options, like if something is out of stock, they're giving it Uber AI model suggestion, replace that item. So this will keep retention. It will help users and give a better user experience. It will also increase the fulfillment rate. You can see and lower the defection rate and also increase conversion. Grocery and retail is enhancing the power of the Uber platform. Monthly platform frequency is up 27% after GNR and is generating roughly around $12 billion in gross bookings run rate. So that's huge because gross bookings is one metric that you really want to look at when you're looking at Uber. It really showcases the demand for Uber service. Their operating metrics in their investor presentation, you can see that their MAPCs, their monthly active platform consumers, that is growing 17% year over year. Monthly trips MAPC is growing plus 4% year over year, and then trips 22% year over year. So it's large growth here. Gross bookings is one of the metrics I said that needs to be looked at when looking at Uber. You're seeing 21% gross bookings constant currency growth year over year, which is really good. Revenue in millions, 19% revenue constant currency growth. So this is really nice to see. And it may justify the higher valuation now that it's gone up since the start of this year. With these type of numbers, these double-digit numbers. Adjusted EBITDA up 33% year over year. Okay, so now let's go to the segment details. So let's see how they broke this down. Mobility highlights, 19% up year over year. Gross bookings. Revenue percentage growth is pretty much steady. Adjusted EBITDA percentage growth is pretty much steady. Delivery highlights for Uber Eats, gross bookings up 24% year over year, gross booking. Revenue up to 19.2%. It's gone up slightly. Adjusted EBITDA has gone up. And freight highlights, the revenue has been pretty much steady, almost no change. Adjusted EBITDA is actually down for this, negative. Now let's look at their consolidated statement of operations. 3 months ended September 30th. 2025. It is up from 2024, is 13.467 billion. Cost of revenues was also up by about the same difference, 8.109 billion. Operations support slightly up. Sales and marketing slightly up. Research and development slightly up. General administrative, that's almost doubled. Depreciation and amortization, it's pretty much steady. So their total cost did increase by about $2 billion. And that mirrors the increase in the revenue. So that's not great. You would like to see a bigger increase in the revenues versus the total cost and expenses, but it's still growing, and still, you can see by the numbers, it's still growing. So income from operations is up slightly because of this match in total cost and expenses and total revenue. So it went up from 1.061 billion to 1.113 billion. Now their net income attributable to Uber Technologies, that went up a lot because of the net income including non-controlling interests was up, and it went from 2.612 billion to 6.626 billion. Diluted net income per share to about $3.11, up from $1.20 a year ago. Balance sheet, they have tons of cash. They have $8.432 billion in cash and cash equivalents. Short-term investments of 654, restricted cash equivalents 477 million, accounts receivable 3.773 billion, and prepaid expenses and other current assets at 1.8 billion, which means their total current assets is 15.139 billion, which is up close to $3 billion from last year. So their total assets at this point are at 63.344 billion, up over $10 billion from a year. Now their liabilities increased to 13.121 billion. The liabilities came in at 34.189 billion. So their Their total assets is definitely higher than their total liabilities, almost by double. Great to see. And then that leaves the stockholder equity at 28.134 billion, which leads to the same number as the total equity, is $63.344 billion. Now, if you're looking at their cash flows, you can see that the net cash provided by operating activities came in at $2.328 billion. And that led to a net increase in cash and cash equivalents by the end of the period to $1.816 billion. And the end of the period, they had $11.483 billion in cash and cash. So really good numbers from Uber. I would like to see that their revenues, the delta of their revenues, larger than the delta of their costs year over year. That's something I wanted to see. Okay, let's go through this investor letter and then we can wrap up with the valuation. So here they're saying key things is Uber's growth kicked into high gear in Q3, making one of the largest trip volume increases in company's history. By the CEO. We're building on that momentum by investing in lifelong customer relationships, leaning into our local commerce strategy, harnessing the transformative potential of AI. Net income attributable to Uber Technologies was 6.6 billion, which includes a 4.9 billion benefit from the tax valuation relief. So that's why, this is exactly why that number was so much larger than last year's number. So this is a one-time thing, and investors shouldn't count on this happening every year in their earnings. Adjusted EBITDA grew 33% year over year to 2.3 billion, and adjusted EBITDA margin as a percentage of gross bookings was 4.5%, up from 4.1% in Q3 2020. Net cash provided by operating activities was 2.3 billion, and free cash flow, defined as net cash flows from operating activities less capital expenditures, was 2.3 billion. So they have very, very few capital expenditures. And that's really cool because they, like I said, they don't spend billions and billions and billions of dollars developing an AV fleet. So you can see that their capital expenditures were about $100 million. 2.3 minus 2.2. They have about $100 million in capital. This is a over $100 billion market cap company with basically $100 million in capital expenditure. So that's really cool. They don't have to spend that money upfront and to build and create a whole market where they don't need to. They can do this aggregator model and become basically the shepherds of the AV fleets that other companies pay billions to build and make. So that's the best bull thesis for Uber that I can make. Cash equivalents, and short-term investments were $9.1 billion. At the end of the third quarter, we intend to redeem our $1.2 billion convertible notes due December 2025 in Q4. Now the outlook for Q4 2025, they anticipate gross bookings of 52.25 billion to 53.75 billion, representing growth of 17 to 21% year over year. And this takes into account a roughly 1 percentage point currency tailwind to the total reported year over year growth. Adjusted EBITDA of 2.41 billion to 2.51 billion, which represents 31 to 36% year growth. So that's really good numbers from Uber management and their guidance. Okay, so let's run a DCF analysis on Uber stock and the company. I input Uber into my bearded investor DCF model spreadsheet here, and for most part it filled in the numbers automatically, like the shares outstanding around 2.077 billion, the current price, total shares, debt, and the revenue base, EBIT margin, D&A percent of revenue, capex percent of revenue, which is very small, like we talked about it, the net working capital, change in capital as a percent of revenue, net income base, trailing 12 P ratio, the current P ratio, the book value equity. So all of this is pulled in automatically by the software. But unlike other analysis that I've done for other stocks, Uber is actually kind of difficult to get the WACC and the discount rate because they're kind of a hybrid model. You can't just say that they're transportation. They also do food delivery and so many other things that I actually had to look up the specific beta, unlevered beta, to do this analysis on Uber. So instead of using the Damodaran unlevered beta from his published data, I went to look using ChatGPT. So I went to use Gemini to just see what the unlevered beta would be. They're saying around 1.23. So inputting 1.23 as the beta for Uber, I get a fair value of around $144.35. Now this takes into account a 10-year projection and using the base financials for year 0, which are based on the real numbers for trailing 12-month metrics. And this implies a 79 to 80% upside from the current price. So that's a really good return if the fair value was achieved. Now, I'm very interested in buying Uber shares, but I want to buy them at a good price. So I would be waiting to buy until it drops below $80 a share, and I'd be very interested to pick up some shares in the public account. So that's it, guys. Make sure you check out the free Patreon and free Discord. There's a lot of alpha for investors, long-term and value investors in there. So make sure you check that out, and I'll see you guys in the next one.